We have apologies from our chair, Councillor Young. So if I could, first item on the agenda be election of chair. Could I have a nomination for chair, please?
I nominate Councillor Franks.
Thank you. Is that seconded?
I'll second that.
Thank you. You're happy to take the chair.
Thank you very much. I've been given a little script to read out. So members and officers, please remember to switch microphones on when you're speaking. Speak directly into the microphone so that everyone can hear you, and switch off again after speaking. Reporting officers using Teams, please switch cameras on and use the hands up icon to indicate questions and comments. The chair will invite you to speak. Have we actually got any officers using Teams?
Graham Olver, Chair.
Thank you. The meeting this evening will be live streamed to the public, and a recording of the meeting will be available on the Council's website within 24 hours. Any exempt or private items on the agenda, the live stream will cease prior to the meeting moving into private. There may be a short delay there. And this meeting will discuss the audit results report for the year 2018-19. Audit and Governance Committee will meet at the conclusion of Finance Review Group. Now then, a few notes before we start. This is a joint meeting of Audit and Governance and Finance Review Group. It's not unique. We've had joint meetings before, but they don't happen very often. My understanding of the deal is that members of both groups will participate in both meetings to ask questions, make comments or whatever. Obviously, if we come to a vote, then you will only be able to vote in the meeting that you're officially a member of. But as far as I understand it, full participation in both meetings. If you've got, I understand we're going to get a presentation from Janet Dawson and Neil Harris. Welcome to both of you. Thank you. As I've been reading through, I have frequently made little scribbled notes in the margin where I got a question, only to find a few pages on the question is answered. So in order not to delay the thing too much, it might be an idea if you make a little note when you've got a question, and if it isn't answered further on during the presentation, then obviously we'll take questions after the presentation, if that's okay for everybody. Final word from me. I have been approached by a number of campaign groups concerned that the Part 2 audit report is being taken in private. It's well known that we, the Liberal Democrat group, do sometimes challenge the taking stuff in private, although we're perfectly happy to do so when there's a good reason. Well, the fact is that the Part 2 report contains either airport company or council estimates of the costs of some of the major expansion projects. Now, clearly, when at some time in the future, you're going to be talking to other groups, other companies, about who's going to pay for it, you do not want your estimate of the costs to be out there in public. And it is our feeling that taking the Part 2 report in private is justified, and we don't no intention of challenging it. I think that's all I need to say. So whiz quickly to the formal agenda. Apologies, John Young and Alan Skeppelhorn. Clive Mead is here to sub for Alan. Are there any other apologies?
Yes, Chair. Apologies from Councillor M. Hussain, who has been substituted by Councillor Ghulam Javed.
Thank you. Minutes, can I sign those? Thank you. Remind you of your need to disclose interest. Does anyone have an interest they feel at this stage they need to declare?
Sorry, Chair. Councillor Javira Hussain is a director of LAL, but she is here on the invitation of Finance Review Group. So she'll be sitting in on the meeting, but will not be taking part in FRG. She will not be taking part in the discussion.
Right. So just here to witness what's happening.
Correct, Chair. And she would also declare an interest in audit and governance.
Okay, fine. If that's the advice you've been given, that's fine. Section 106, I guess it's all subject to Section 106. No disclosures, no?
None that we're aware of, Chair.
The Chair's report. Well, I hope he's having a nice time in the Seychelles.
Well, I presume you're having a nice time to say so.
Okay, so it's over to Janet Dawson and Neil Harris. You want to give us a presentation? Over to you.
Thanks very much, Chair, and thank you very much for the opportunity to talk you through where we're at with the audit of the 18-19 financial statements. So you've got in front of you our audit results report, which sets out the progress that we've made to date. And this has been a long time in the coming, the completion of the 18-19 audit. So we thought it was important to give you the overall picture, which is that we're almost complete, bar a couple of areas which are of significance to our opinion and to the way in which your financial statements are presented. So, as I say, we're materially through or significantly through our work. We've highlighted in the report 3 or 4 areas where we're still in discussion with officers as to how those should be represented in your accounts, and then what our opinion will cover. And what I thought I would do is take the report as read, but hand over to Neil Harris to highlight for you what those key areas of discussion are and how close we are to finalising those.
Thank you, Janet, and good evening, members of the Scrutiny Finance Review Group and also Audit Committee members. Members should recognise who I am. I'm Neil Harris, an Associate Partner in EY's Government Public Sector Assurance Practice. The reason for Janet being here today is that we have, because of the level of critical judgments that we're making on the external audit of Luton Borough Council, particularly associated with judgments around the valuation of the airport, the capitalisation of airport expansion schemes, and the value for money report that's in the agenda papers for the Audit and Governance Committee, and those difficult judgments that we're closing out with the council officers. We believe the risk designation of the audit has been increased to a level at which a partner needs to sign off the external audit of the council's, our opinion on the council's financial statements from the 18-19 financial year onwards. So Janet has been brought onto the engagement team to provide that additional support to myself, and we are engaged with our professional practice team about how we're concluding a number of areas that remain to conclude the external audit. So I just wanted to provide that context because members will all be familiar with me, and that's the transition with Janet that will be signing, and myself still being on the engagement to provide support to Janet. In terms of the progress on the external audit, I think it's important to say that having been to this committee on several occasions to provide a verbal update and a position statement last June, we have actually made substantial progress on the conclusion of the 18-19 audit of accounts. And we're now at a stage where there are, I would say, 2 substantive areas that we are concluding with the council officers at the moment. And if I take those in turn and then summarise where we're likely to be on the value for money opinion. The first is on the valuation of the airport. And from all of the work that's been undertaken post the COVID-19 pandemic around the modelling that's been produced by Arup, the information that's fed into the stabilisation plan for LAL, what's become clear is that there are some fundamental assumptions in the valuation of the airport that we believe need to be revisited by the specialists that produced the valuation for the purposes of the accounts. So Deloitte produce a valuation that's incorporated into LAL's financial statements, and they're consolidated into the council's group accounts. But those key assumptions are to do with what happens at the end of the concession agreement and what's called the reversionary interest. So under accounting standards, this the airport is accounted for as a service concession agreement. It's valued on the basis of fair value and the discounted cash flows depending on passenger numbers. But we believe there is a significant reversionary interest at the end of the concession agreement where both the LAL and the council have a significant residual interest in the airport at the end of the concession agreement. And for that reason, we believe that's currently not accounted for in the valuation. So Deloitte have produced a revised valuation. We're working through that at the moment with our specialists. There are some conversations that still need to take place between our specialists and Deloitte's to a point where we can agree the principles of that valuation. And that's been struck at the 31st of March 2021. Once we're comfortable with those assumptions, we need to work the implications of that back into both the 1920 and 1819 financial statements and determine whether that might have impacted on the prior period in 1718. Now, this is an area where actually we're in agreement with the officers of both the council and with LAL about the basis of the valuation and what assumptions need to be revisited and changed. But this is quite a complicated exercise, and we're working through that as quickly as we can with our specialists and where appropriate with our professional practice team before we can conclude. The second area on the audit of the financial statements is the judgments, the critical judgments that have been made by both LAL but also the council in the group accounts associated with the capitalisation of airport expansion schemes. Now, there are three that are included within the group accounts. The first, and I think this is not controversial at all, is associated with the DART scheme, which clearly is very obvious that that's an asset under construction that's nearly 90% concluded, and we have no concerns with the capitalisation of those costs. The second, and we've had discussions with officers throughout the course of the audit, is whether or not the costs that have been incurred to date associated with the Century Park Access Road scheme should be capitalised in the council's group accounts. And we look at events and conditions that have taken place, not just at the balance sheet date, but up until the point when we issue our audit report. Now, we know strategically the council and LAL are committed to the CPAR scheme. We know the reasons why. We know that the intention is to unlock a piece of land and make advantage of the enterprise zone in and around Luton. So we understand the strategic objectives. We also know, though, pre-pandemic, that scheme was paused at that particular point in time because it didn't meet certain tests around transport and economic benefits. But that scheme is currently being revised and with a view of securing levelling up funding. But that's yet to reach a stage where a revised business case has been put together and the feasibility and viability has been confirmed. So for that reason, I think officers have reached a conclusion, is my understanding from the officers' cover report, that the costs currently within the council's group accounts will be impaired, just to reflect the fact that currently the conditions don't exist to capitalise the costs from CPAR, and they will be brought back onto the balance sheet at such a point when there's a probability that that scheme will take place and lead to positive economic benefits. The final area on the airport expansion schemes is around the development control order, which is the cost to seek planning consent from the Secretary of State to expand the airport up to 32 million passengers per annum. We've had extensive discussions with officers throughout, and both the council and LAL throughout the course of our audit, including with specialists. We've got to a stage on this where actually we can see that there is a probability that that airport expansion up to phase one, which is our understanding up to 21.5 million passengers per annum, does have a prospect of a transfer of economic benefits. What we are still in discussions with the officers on and through our professional practice team is the measurement of those costs. So whether all or some or a proportion of those costs can be capitalised in the council's group accounts associated with the phase one scheme. We are still in discussions with our professional practice team on that particular judgment because we're still undertaking further work to understand both the accounting principles that have been used, but also the basis of measurement. And we've been having dialogue with the auditors for LAL PwC to understand precisely the position that they've reached. We're also making sure that we go back and revisit all of the information that we've received throughout the course of the audit from the officers to explain their justification for attributing all of the costs to date to phase one. such that we can reach a final conclusion on this matter. Now, we were hoped that we'd be able to come to this meeting with that conclusion, but we believe further work needs to be undertaken to clarify the accounting principles and the measurement basis with our professional practice team, and we're dealing with that as a priority, and we'll be updating both the officers and members with a conclusion of that work. If you read the audit results report, we've lumped both the CPAR and the DCO costs together because they're both individually and collectively material to our audit opinion. And at the time of writing our audit results report, at that stage we had a disagreement on the treatment of the CPAR costs. But in view of the fact that the council officers are indicating they will be amending the accounts, clearly that it has a positive impact on the impact that would have on our audit report. On the DCO, I think we do need to come back to you on where our final position rests on this, as to whether we still disagree with a certain element of those costs that should be capitalised, or actually whether we've reached a position where we're content with management's judgments on what the final what the final disclosures are in the council's financial statements. I will just highlight just a couple of other points on the audit results report before I open up for questions. The first is that on the value for money conclusion, we do intend to qualify our value for money conclusion. So our conclusion on value for money looks at the council's arrangements for securing economy, efficiency and effectiveness in the period up to 31st of March 2019. Members will be aware that internal audit issued a limited assurance opinion on the council's procurement and contract management arrangements, and have undertaken extensive follow-up work to determine the impact of breaches in the council's procurement for spot placement contracts, which are typically in adult social care and homelessness services. Those breaches go back to 2015-16, and the total value of those breaches is just over £40 million cumulatively across those years. So for that reason, we believe from all the work we've undertaken, including with forensic support, that actually the council's internal auditors have rightly highlighted this issue. They've followed up appropriately. The council have acted on all of the recommendations that have come out from our work to date, but to improve arrangements and controls for procurement and contract management. But nonetheless, there are still significant weaknesses in those arrangements for the 18-19 financial year. And for that reason, we will be qualifying our value for money conclusion. The final area is just on disclosures that need to go into the council's accounts associated with going concern. Now that looks at a position 12 months from the point at which the accounts are authorised for issue. We've been reviewing the council's cash flow forecasts for the next 12 months, and we're subject now to resolution of some final questions. We're content with that cash flow forecast, and the council will now be updating their disclosure notes just to reflect the assumptions associated with the future budget position, future levels of borrowing, debt financing, but also the risks and uncertainties that are contained within the group arrangements, particularly how LAL recovers from the COVID-19 pandemic and the ongoing risks and uncertainties that might face to the council from a group perspective. And that wouldn't be that inconsistent. If you've read LAL's 1920 financial statements, you will note that LAL themselves include a material uncertainty on going concern in their financial statements. So we'd expect some of that to be replicated in the council's group accounts. And that process will be concluding as well as a priority. So those are the key highlights from the 18-19 audit results report. And Janet and I are working as hard as we can to get this audit concluded as soon as possible. But if you've seen our 1920 audit planning document, it's really important that we get the principles right on all of the areas that I've just run through. The reason being is once we've concluded that, we can swiftly move on and conclude both 1920 and move rapidly into 2021, because a number of the critical judgments that are delaying the conclusion of 18-19 will impact on subsequent periods. So it's important, I think, for the officers and for us as external auditors and for you as committee members, that we get the principles right now and don't have to revisit this again in the future. I think with that, Janet, unless you've got anything else to add, that concludes our presentation. Thank you.
Thank you. Okay, well, I've got a few questions, but I'll open it to the floor first. And apologies, I can't see you, Steve, so hit me over the head if you want to get involved. Yes, go on then.
Yeah, Thank you. I just want to make sure. So this is Councillor Burnett. So has things moved since what I was trawling through last night reading? Is that a yes or a no? Because I came here understanding that we were looking at a qualified account and that we were going to get an audit certificate, and I'm hearing work still in progress. Is that correct? That's a yes or a no?
That is correct.
So it was worthwhile what I did manage to trawl through and read.
So, sorry, yes, that is correct, that there is still work ongoing. It is worth the read through because, as Neil has highlighted, there are just the final areas that we need to conclude, which we expect to do within the next few weeks with officers.
Or as there's still more work to be done, will we be meeting again? Yes or a no?
My expectation is yes, you will be meeting again to approve, the audit committee will be meeting again to approve the final set of statements for 18-19 because those have not yet been presented to you.
Okay, so and what I'm understanding from Neil, you're saying that the assumptions that were used prior to the pandemic, yeah, you're going back to reassess, to work with IAS 16, which is around properties and all that. So the assumptions that the officers used before the pandemic, you're assessing whether the assumptions are still valid, and you're working with specialists in the field, Deloitte, to make sure that the assumption that we're doing retrospectively, because this is a post-account event, we set it from 2019 in order to move forward. Is that correct?
That is correct.
Okay. All right. Okay. So there's a lot. When we have the next meeting, can I ask that the lovely succinct way that you have verbalised things, could we have it on the presentation? Because I could have burnt this. Yeah.
Well,
sorry. I'm not meaning being disrespectful.
So, Councillor, obviously we have to report to you. We have to issue the audit results report. We're required to do that under auditing standards, and we have to issue it at a certain point in time to reflect our status of the audit at that stage. Well, obviously, we indicate in there what's still to be concluded, and until we've gone through our consultation processes and actually issued the opinion, that position could change. But I think it's important that you as members knew the position at the point at which the report was written, because that reflected the facts and circumstances at that point. The only other thing I wanted to just come back to you is that just to separate the 2 points, because you mentioned about assumptions and specialists. I was talking about 2 parts. One was the valuation of the airport, which very much involves Deloitte, where you refer to IS 16. That refers to an account.
Did I remember that correctly?
You did, yeah.
Okay.
That refers to an accounting standard that applies to the capitalisation of airport expansion scheme costs. So they're 2 very separate pieces of activity that we're looking to close out on at the moment, but on both we're involving specialists.
Sorry, Neil, the substance of the qualification, if I got it wrong, in a whole of a cake, or you're cutting it, a large material part of it is around IAS.
That's right. Yeah, it's just you mentioned Deloitte, so I just wanted to clarify that.
So the Deloitte bit is not in relation to the IAS.
No.
It's relation to the valuation that Lal is using.
Yeah.
Okay. So in moving forward, are these papers still going to be relevant that I was reading through last night for the subsequent meeting?
Yes, because
I wanted to do things properly and read it page for page, and I ran out of time.
That's good. So I would say that we would be issuing an addendum to this audit results report. Jenny, agree that we would just highlight what's changed rather than regurgitate the whole thing again, because I think this stands on the record of where we were at the point we wrote it.
Okay, so in summary, there's no certificate tonight, and there's no qualified reports we're going to get on our accounts as yet. But in relation to the value for money, you said it is qualified. Is that? Thank you, Chair.
Okay, if I can just hang on a sec. clear up this issue about meeting again, clearly there will have to be a meeting of the audit committee to sign off the accounts. That's statutory, so that will happen, no question, when they are finally agreed. This meeting was really because the Scrutiny Finance Review Group wanted a better understanding of why it's taken so long to sign off the accounts. So whether FRG will be involved in any subsequent meeting depends very much on whether FRG feels they've got the information they wanted. But certainly audit, without any question, will have to meet again to sign off. I've got a few people with hands up. Robin Porter first. Councillor Ahmed here. No, cross you off. Okay. And Abbas. Okay, Robin, over to you.
Thank you, Chair. I thought it'd be useful just to make a point of clarity, Chair, not just for members, but also for members of the public that are watching. When Neil's described the change in valuation of the airport, we're talking about quite a big increase in the valuation of the airport, rather than anything that members of the public or indeed members of the council should be worried about. Thank you, Chair.
Abbott?
Thank you, Chair. Yeah, I'm going back to Jackie as well, because it felt like the world's about to end tonight. You know what I mean? Last 48 hours. Because normally, because this is the first meeting of FRG and audit, and it has been pressure because I've been reading through this last night, today, all day, near enough. Attended 2 funerals as well, come back and started reading again. And it did feel like, you know what I mean, it was about to end today, you know, with that impression. But listening to you now, Neil, because we've sat together since 2019 and you have been always straight and forward on audit and governance. And we've always we've always had this relationship as well, where if we weren't sure, we always came back to the next audit and governance committee to clarify stuff. But it's good to listen to you today now, because I was expecting a lot worse. Yeah, but it would have been good if you had summarized it all up for us. Yeah, you know what I mean? Yeah, on a presentation or a late item of an email or some sort, it would have been really, really good, because reading your report and what you said is a lot different. Yeah, and you have moved on, and I thank the Chief Exec and the officers incorporating with you, because in your report it felt like you're on your own. Nobody's incorporating with you at all. But it is good that you've started that relationship with the airport. The officers are moving forward, and let's see in a couple of weeks' time. I think you haven't given a precise date, but a couple of weeks, couple of months, when we do have that final report, yeah, it'd be good to have a look at it. But again, can you, if it is one of your Neil documents that's 300 pages long, can you please summarize it? It will be, yes.
I'm sorry.
Yeah.
So, I mean, you are talking to someone that has a reputation of being called Tolstoy at work. So I'm not even sure a presentation would have worked. I think a verbal summary from me is probably going to work much better for you as members. The only thing I would say, and you're absolutely right, Councillor Abbas, this has been a journey, but it's a complicated set of circumstances. And you know, for us as external auditors, and it has been painstaking. I think all of the officers sitting here, I think, want this audit concluded as well. I think we want this audit finished as well. It's not in anyone's interest, but we want to get it right. And there's still quite a lot of, still facts and circumstances and principles that we want to make sure are absolutely nailed down before we issue our final audit report.
One last thing, you mentioned specialists, but you don't give names. Who are these specialists that you've been getting to do your work with you alongside with Deloitte? And
so as part of, and this has been going on for well over a year, but we have been involving specialists in our corporate finance team who have aviation expertise, to support us with our work. But we will be involving our real estate team as well to look over the valuation that Deloitte have used.
Hearing you tonight, you know what I mean, you are confident that the airport, because that's what this is all about, CPAR and airport, you know what I mean, is going in the right direction.
So perhaps
Try
if
my
I,
luck.
perhaps if I step in, what we're setting out for you this evening is where we've got to on the financial statements audit. What we're not commenting on in this report is, we don't provide advice. We don't look across all functions of the airport. We look at how this is reported within your financial statements, and then also our wider responsibilities on value for money, which is very prescriptive around the arrangements you had in place during 1819. So that's the extent of what we're commenting on within this report.
Okay, Councillor Ahmed decided you want to come back. Well, I got Ahmed first. I'll come to you in a second, Richard.
Thank you, Chair. It's just a comment, basically. It's not a question. I do appreciate the work Dev is doing on the behalf of the council, and I read your reports and everything. And as Abbas, I think, questioned you earlier, but in my view, I think we are going in the right directions. You reported very well, very in details. And when you raised a couple of concerns and they was debated in the council, the dev department, and I think only still in discussion the DCO things, isn't it? And the point and rest of everything, I think the council has agreed and satisfied you on those points. So if we can clear the council on behalf of council can clear within 1 month, I think we can clear these 18 and 19 accounts, isn't it? So it's good work. That's why just a comment, not a question. Thank you.
Thank you. Richard.
Thank you, Chair. Actually, just to follow on the comments just been made, the disagreement over the DCO, could you go into detail about that? And is there a chance that disagreement might be resolved and that the accounts will have to be signed off with that disagreement unresolved?
So let me give you a little bit more context to that, which is that clearly the DCO costs sit in Lal's accounts. So that's a management decision assessment as to how those are accounted for. So under what accounting principles, and then at what measurement value, as Neil explained. And then they have their accounts audited by another of the big four, and they also assess all of that. Now, then that number comes into the group accounts. Management here need to assess whether they agree with what's coming out of Lal and the basis on which that's being accounted for, and then we need to have a look at it. So you've got 4 parties already looking at the very technical accounting requirements and principles associated with something that is uncertain in its nature, not the DCO itself, but our DCO is uncertain. You need to look at the probability of that going ahead. You need to look at how much it costs. You need to decide whether you can fair value that or whether you include it in your accounts at direct cost, and what's the most appropriate way to do that. So there's 4 parties all looking at that, trying to arrive at the right funnel of accounting principles and then the judgments and estimates that are involved. When we were writing the report, we were in a position where we did not have a clear picture. We've been working very, very closely with all of those parties over the last probably month, but we're really getting to a point now where we've got much more clarity. And that's why we've come with a different position, that we're comfortable that we are working through that well, and we're hopeful, therefore, that we can get to a conclusion where the principle's agreed, and therefore the measurement is agreed, and therefore the number is agreed. So I'm hoping that we can avoid qualifying the accounts, but you need to leave it with us and let us work through that and bring it back to you and tell you where we're at. Okay, good.
Wanted to come in?
Yeah, thanks, Chair. Just a couple of points is there's a report which is the council response to auditor's statement, but I think Janet and Neil has responded to quite a lot of our response, so it's already covered, but members can look at the council response to the annual audit results. Just a couple of points which I would like to clarify here. What we're talking here is about the group accounts. The council accounts, and you will see the report, we haven't got any major concern. So the council accounts where we use to set the council budget, the revenue budget, the council accounts, so far, we haven't got any areas of concern or disagreement with EY. It's only the group accounts where we have areas of judgment. It's not, we're discussing, as Neil and Janet mentioned, it's very complex. And it's not saying that it's right or wrong, but it's just we have to get to that common understanding and agreement. And accounting is very complex. But one of the things which I'm going to say as officers, we have followed, and as Neil mentioned in his report, in our report, we followed all the advice we have received with external expert. And in terms of LAL as well, those judgments which have been used by LAL management team and the council have been signed off by PricewaterhouseCoopers, which are LAL auditors. So that's what I'm saying here. It's not right or wrong at this stage. We're just discussing to come to a common judgment, because so far what we've produced in the council accounts, the basis on which I sign off those accounts as Section 151, takes into account LAL accounts, which has been signed off by LAL board and have been signed off by LAL auditors as well. So that's why Janet mentioned further discussion is taking place with LAL. Any things which you discuss with LAL will go to LAL board of directors because they've got the ultimate responsibility. So that's why Janet said there's 4 or 5. So when you're discussing consultant and auditors and council officers, we have to come to that. And as Janet made, we made significant progress. In fact, before that meeting, I had an hour discussion with Janet and Neil. So we are trying to get to that resolution, and we are making very good progress. That's one point. Second point, Robin already made that point. The valuation of the airport has increased threefold. That will add additional value on the balance sheet of the airport. So one of the point where when we discuss about the level of loan, what we call compared with the level of assets, the asset has gone threefold. So when we go into the detail of that, obviously it will be explained, and it will be explained more to the audit committee who has the responsibility of signing off the approving the accounts. So that is a positive. The other bit which I would mention here is, as Neil mentioned, we made significant progress in terms of the cash flow. And one of the things Neil mentioned is stress testing. So the executive will receive a copy of the budget report. FRG is scrutinizing the 22-23 budget report. So it's a balanced report. And that budget report takes into account all those which auditors look at stress testing our financial resilience. And that means not just only testing the financial resilience of the council, but testing the financial resilience of the airport, because the airport brings 27 million net, and that's helped the council to deliver key services. So it's a system we look at, and that's what you talk about group, as Neil mentioned, we have to look at the system as a whole. So in terms of the stress testing, what is the resilience of the airport, we've done stress tested, and those stress tests have been reflected in the budget. And as Janet and Neil mentioned, and members are aware, pandemic is the biggest risk. Yeah. And what pandemic, we are trying to do our best, and we do that resilience test and reflect based on that resilience test whether the system is resilient. But so far, our view as officers and me as Section 151, yes, we have stabilized. Fingers crossed we get out of this pandemic, and then we'll have to be in the road of recovery. So those are the points which I was going to make. And then another point which we'll see in terms of value for money, the question of procurement, yes, has been highlighted by Neil. And we have been discussing at the committee over the last 4 or 5 months. And there's a lot of work has taken place there. You will see we've agreed all the free recommendation is already in place. There was a recommendation came to council. We have to change the council standing orders. So a lot of progress has been made. But one of the things is value for money has got 2 elements. One is the governance bit. One is the economy, efficiency, and effectiveness. On that basis, Ernst & Young agree, and in their report, there isn't any concern in terms of council delivering that value for money, which is one of the criteria which when auditors will sign off is the truth and fairness of the accounts, and whether the council has got arrangement to deliver value for money, with the exception of that procurement things. So a lot of progress has been happening. We have been discussing over the 9 months. Robin has been involved in a lot of discussion, but it's a lot of work. It's technical, it's things, risks move, pandemics moves, and you have to assess to reflect the latest position. So, and as we mentioned, Councillor Janet, you mentioned, is post-balance sheet event. So these, although we're talking about 18, 19 accounts, it might sound quite 18, 19, now we are 2021, but the reason it's being reassessed because any account which is going to be signed in the next couple of weeks or 4 weeks, we'll have to take into account what the situation the next 12 months from the date of the signature, not when the date when the account was closed in 1819. So 1819 before the pandemic were just on the position of signing those accounts. And that's what Ernst & Young will have to follow, all the financial regulations and the whole UK, all the company had to put on hold. Auditors had to put on hold on signing the accounts to assess what are the post-balance sheet event. So it's very positive, but it's complex. Yeah, I've moved from the technical bit, but my rush and everything, I'm a bit rusty. So, but yeah, it's Ernst & Young pushing us to make sure we get everything right. So, and I'm really grateful for the work relationship we have with our auditors. It has been helpful. Thanks very much. Thanks, Chair.
Thank you. Dave, were you signalling you want to come in?
Thank you. Yeah. So we're looking at 1819 accounts, and we were just told that the value of the airport will increase, which is, yeah, to reflect on that. So that's just an asset, and the value's gone up. There's no actual cash. It's just we're saying it's worth an amount now. So if it can go up for 1819 prior to pandemic, can it then suddenly go down and have to be reassessed now we are in pandemic? And how would that reflect on the next set of accounts? Because we're just looking at 1819, we're saying we've revalued that at that stage and it's now worth more to the council as an asset. And you said it could then impact on 17 and 18 accounts, all of which I find a bit strange, but I'm just trying to get it in my brain. So we're saying it's going up in value. I'll live with that. If it goes down in value because of the pandemic, or could that be the case? Could it go down in value from the pandemic? Please. Thank you.
I can answer that. Yeah. Okay. Although we've discussed about pre-pandemic and post-pandemic, the main variable in the valuation, there are 2 or 3 main variables when you do valuation. And one of the variation and assumptions, that's what Neil referred to, is pre-pandemic and post-pandemic, is the number of passengers. So that is the main variable where the pre or post-pandemic had an impact on the valuation. So what we've done now is the pre-pandemic, there was a valuation which was done over the last 2-3 years. And post-pandemic, the latest valuation reflect the recovery in the passenger numbers. And in fact, Deloitte took a view that it will take slightly a bit longer to recover. So it has got a best case, worst case scenario. The other 2 variables which has caused the increase in the valuation is more to do not necessarily with the pandemic. So the valuation is based on 18 million when we reach that 18 million in 2, 3 or 4 years time. So that is a variable, but the main reason for the increase in the value of the airport is to do with, as Lynn mentioned, the reversion release. So previously it was valued based on as a state valuation, that Deloitte was right to do that as an estate. So if we have a stream of income from the airport in perpetuity for the last 40, 50 years. But now, after discussion, there has been an acknowledgement, and we know it's contractual, that in 2032, that airport will come back to the council or to honor the concessionaire. That's what we talk about, the upfront payment. If that airport come back to the council in 2032, that's contractual, that's legal, that's certain, it's going to happen. There's no if or but about that. When that airport comes back to the council, it comes back to the council without any debt. Council get the whole council, the airport come back to the council with all the earnings with the airport is currently generating and which the concessionaire is getting those income. Once the concessionaire walk out, those income with the concessionaire is generating becomes council. So the concession fee, which currently we are generating, will go by inflation. In 2032, a significant event will take place. Contractually certain is going to happen. There's no probability. And then the airport income, which will be the current concession fee, which we are getting, plus the additional earnings generated by the current concessionaire, will become the LAL income. And that's the bit which was acknowledged now, and that's the bit which is going to change. But the other things which are other assumptions when audit committee will go through, when we bring the report, we'll go through. But the fundamental things is, coming back to your point, is the passenger which we are using even by 2032 is just 18 million. So we're not expecting that's an expanded airport. So it's quite prudent in the valuation, not anticipating beyond 18, and that valuation is based on 18. So it's a bit a long explanation, and that's what Janet can say. It's very technical. But I'm trying to put it a simple term is, yes, pandemic is one element. The passenger numbers we are saying will reach in 3-4 years time. I can't remember how long, but 18 million. So we're not anticipating 18 million. And the reversionary release, which is bringing that additional value. And that's what has changed. But when it comes back to the audit committee, you will see the detail of that. Just to give you that reassurance that, yes, it can go down, but it's not like it will go down significantly because we are hoping that will come out of the recovery. The pandemic, who knows? Yeah, it's a risk. As Vanessa Young highlighted, it's a risk. And we all know, the council, everybody knows there's a risk with the pandemic, not just for the UK economy, for the world. Yeah, thank you.
Anybody else? No? Okay, just a couple of areas I wouldn't mind exploring a little bit. Clearly, the value of the asset is of critical importance, particularly in light of the level of indebtedness of the company that owns it. I'm just trying to get an understanding of whether what's being valued is the asset or the company, because that could be different in certain circumstances, and also some sort of understanding of, I mean, you talk about material errors in the valuation. I just think I'd like a better understanding of how two allegedly expert companies have come to different conclusions. And finally, I guess, are they talking to each other as part of the attempt to get this resolved?
Councillor Franks, I'll take the last question first, which is the material errors. Obviously, as Robin's alluded to, these could be a significant uplift in the valuation of the airport that's far in excess of our audit materiality. And as Dev has explained, this is because of certain assumptions that have been contained in the valuation of the airport. The most critical one is what happens at the end of the concession agreement. And we believe there's a reversionary interest, there's a residual interest that has not yet been accounted for in the valuation of the airport. Deloitte have been asked to revisit that, and our experts in our EY real estate team will be reviewing that and having conversations with Deloitte to make sure we get to the right answer on what we think the final valuation should be that's reflected in the financial statements. Now, that valuation is for accounting purposes and to meet accounting tests. It's probably, in our opinion, very different to perhaps the first element of your question, which is what a willing market participant will be willing to pay for the airport at the end of the concession agreement, and which touches on a little bit of what's in our value for money arrangements report, which is going to the Audit and Governance Committee shortly. Janet, have you got anything else to add to that?
Just the point about what's reflected in the group accounts is not the value per se of the company, but actually the consolidation of all of those accounting entries that are reflected in their accounts and presented appropriately in the group account. So it doesn't, again, to Neil's point, it doesn't give you a commercial valuation of that company. It's the accounting principles of bringing all of that ownership and those liabilities into the group accounts to present the overall position for the council and its group.
Thank you, that's helpful. The other area be useful to explore is the difference of opinion between Ernst & Young and PricewaterhouseCoopers on the capitalisation issue. We're talking about two huge, well-respected international accountancy firms. Just slightly interested in understanding how you come to such different conclusions.
Well, I think the interesting thing is your choice of word conclusion, because we haven't yet concluded, and that's the point that we're going to need to come back. So I know that's semantics, but it's important in that we are working very closely with them to understand exactly how they've taken the principles of accounting and flowed the treatment of the DCO through those, and then also how that then determines the basis of measurement. And I think it's fair to say that in those discussions, we're just exploring all of the different options with them. They have taken a particular view when they've signed off accounts, but they are revisiting their view just to make sure that they are content that that is technically appropriate as well. So we're both revisiting, or they're revisiting, and we're looking at it with them. And to Neil's point, once we've got those principles agreed as to how the DCO should be accounted for, now we can apply those principles back to the 1819 accounts and understand how that would be reflected in the group accounts for 1819. And it may be that we arrive at a different position for the group accounts from what was appropriate at the point that they signed off the LAL accounts for 1819.
Yeah, okay, I think I'll leave it there. Thank you. Anybody else wants to get involved? Last chance before we move on. Okay, Finance Review Group is really asked only to note what we've received. Frankly, I think that's all in any sensible way we can do. So I'm happy to move that Finance Review Group notes what we've received. Is there a seconder for that?
Yes, I'll second that.
Everybody comfortable with that? Anybody against?
If you're happy, Councillor Franks, we're happy as well. No, we won't.
That, well, I have to say it's a more comfortable and more comfortable conclusion than I had expected to arrive at, because of the work that has clearly been done and is still going on to resolve the areas where there are still differences. So I think that concludes the meeting of Finance Review Group. I'm sorry? Oh, yes, of course. Yeah.
Sorry, Chair. We've been requested to hold a minute's silence for the Holocaust Memorial Day at 7 p.m.
Yeah, I think that's an excellent idea. Let's do the minute now, and then that gives me time to try and find what I'm looking for the next item.
7 o'clock, the minute silence at 7 o'clock. So we've got 5 minutes.
Okay.
Page 4.
It's page 9/1, Chair. Please.
So we're saving our 1 minute until 7 o'clock. Fine. Item 9 is the recommendation that we note the audit results reported, according to my copy of the agenda. The question of the officers' responses is on the agenda of Audit and Governance Committee. Well, no, what you're talking about is 9/2, which is yeah, I've got that. I really didn't think that was business for FRG, to be honest. But if we're expected to make some resolution on that, I would suggest that what we say is it's a matter for Audit and Governance Committee to sort out and decide for themselves. I'm got a particular recommendation that I would like to send to Audit Committee. Unless anyone else has? No? Okay.
Can I just clarify? So because FRG had the presentation from Neil, and that presentation is both to FRG and Audit Committee, you're quite rightly as chair, you've asked as many questions. Most of the things which I've covered in my report, which will be discussed at Audit Committee,
yes,
has been covered. So as chair, if you say the report, which my report has been covered among those discussions, then that's fine. I don't need to present that report. Now, if that report is coming back to Audit Committee has the responsibility more to look at the valuation, things like that. So the chair can have further discussion. If some of the question has not been answered, then the members of the Audit Committee, because they've got that much more in terms of reference for the statement of accounts, of going concern, of valuation, then they might hear, yeah, but you're absolutely right. From FRG, you're quite right. I don't have to present that. I agree. Thanks.
Okay, then I will formally move that the officer response be that fine that the Audit and Governance Committee deal with that at their meeting, and that we have got no particular recommendation to make as to how they deal with it.
And you don't have any concerns, you're satisfied, then you refer to it. That's what you want.
No, I'm not saying we're satisfied. I'm saying we have no recommendations to make to Audit and Governance Committee.
Okay, that's fine.
That's the conclusion of business for Finance Review Group, Chair. Just for the purpose of clarity for members of the public what viewing this recording, Finance Review Group has now finished and we are just about to start Audit and Governance Committee.
Hello, everybody. My name is Consular Raja Ahmed, and I'm chair of the Audit and Governance Committee. In a couple of times, we are going to start our normal meeting, but before that, exactly on 7 o'clock, we are doing 1 minute silence. Yeah. It's 30 seconds left. Yeah. Thank you. Members of the Finance Review Group have been invited to attend this meeting and are invited to be involved in the discussion, but not the recommendations of the meeting. At the chair's discretion, members of the FRG are also invited to remain in the meeting once the Audit and Governance Committee have moved into private session. Members of FRG may only participate in the discussion at the invitation of the chair, but will not be involved in the decision of the committee. Any apologies of the meeting?
None, Chair.
Minutes of the last meeting. Everybody agreed? Thank you. Disclosure of interest. Javeria Hussain, you already
Councillor
did.
Hussain.
So I've interest in as a director of LAL, and I've taken advice from the council's monitoring officer, and I shouldn't be participating, nor should I be voting. So if it's okay with you, Chair, I'd like to leave.
Yes, of course. Thank you. Any urgent business?
None, Chair.
Reference from the committees and other bodies?
Again, none, Chair.
Okay, we are moving agenda item 7, Ernst and Young audit reports 18 and 19. I think we discussed what it.
Discussed, but you need to make a recommendation, Chair. Clause.
Dave, you want to say anything? I need to make recommendations of the Ernst and Young. Just make the reports.
Yeah, make and then I would.
Does committee recommend these reports? We already have from the audit and Ernst and Young. Yeah. Thank you. Recommended here. Yes, agreed.
Agenda item 8, Chair. This is the LBC response.
Yeah. Moving agenda item 8. It's LBC response to Ernst and Young. Dave.
Present first. I think, Chair, if I can just no. Okay. Yeah. Okay. So yeah. So thanks, Chair. Sorry, it's just there has been so many reports. I myself am getting confused. So we're discussing the annual results report. Yeah. So LBC's response. So that we had a discussion on FRG. As mentioned, the audit committee has got the responsibility for the accounts. So in terms of the risk, in terms of the disclosure, in terms of the group accounts, in terms of the going concern, post-balance sheet event, that's why we are bringing this to audit committee. Neil has made his presentation. We went in quite detail. There was discussion took place at FRG, but now audit committee members, I have already covered all the points when it was FRG. If there's any technical points, I can go through it again. But one of the things which we're discussing here, all the points which Neil has made, is to do with the group accounts. So that's where the capitalization, the valuation, it's in LAL, and we have further discussion. So at this stage, they are on the main items, the further discussion which we're planning to complete in the next 2 to 3 weeks. I'm quite happy to go through the report if there's any specific area in that report which you would like to discuss and get clarification before the audit committee members decide on those recommendations.
Yes, Jackie.
Given things have changed, what is required of us to do today? Is it to note the revised update that the auditors has given us or not? That's what I need. That's what I need to be clear. Are we noting the verbal updates? And because we've already asked questions as a result of their of their update as part of FRG, which I hope would be captured in the minutes. So both FRG minutes and audit, where there's crossover, are the same. So what in addition do we need to do that is specifically in us that we need to tonight? That's what I need, that clarity, because to me the agenda has slightly changed.
Yeah, okay. So absolutely right. That's probably our apologies. We should have clarified that. When the report was sent, the annual results report, since then there has been further discussion, further information. So it's still, yeah. And that's the reason you will see when we go through that. That's why I got a bit confused. When we go in the value for money report, I have included all the recommendation again. So when you come to having the recommendation of the discussion of the value for money, which Neil and Janet will present, then all the recommendations from the annual results report are listed in that report. Once all the debate has taken place, then there's a specific recommendation which we can take you through one by one. And since our discussion, if some of them audit committee members feel that they go with the recommendation in the report, then they agree. If audit committee members feel after the discussion and debate that some of the things they are of a different view, then audit committee members can make that. So that's why it's a bit so many report and everything. So that report, when we go the LBC response to value for money after the presentation from Neil and Janet, all the recommendations are listed. So we'll go through those one by one. And individually, I will take you through the The point is, when it will be presented to audit committee, some of them will just say to note because further discussion is taking place. So yeah, so just because they're specific, so we'll just say this is note, this is awaiting further discussion. Some of them is a recommendation. So we'll go through that.
Succinctly and say which one is to note because we've done the discussions.
Yeah.
And okay, thank you.
Thank you.
Yeah, Med, please.
Sorry, thank you, Chair, for you. In the report number 8, which is our LBC response, there are 5 recommendations in the report. Are we taking those individually or are we taking them now?
I would suggest because, and that's those recommendations were a week old. The recent report which was sent on Monday, those recommendations has been transferred to the new report, which is the value for money. So that's where the recommendation will. So I think the minute should be the revised recommendation will be discussed as part of the value for money report, LBC response, and then you take those. So right now you're not voting on those recommendations.
We're just noting agenda.
Just noting.
Okay, thank you, Chair.
Agenda item 8. Right, brilliant.
Yeah, is that okay? Yeah. 2019-20 audit plan. That's the revolution. Yeah, we're moving agenda item 9 is EY 1920 audit planning report.
Thanks, Chair. So you've got in front of you the plan for the audit, the subsequent year audit. So 1920's financial statements and value for money conclusion. And you'll see that we've set out the key areas of risk that we'll be addressing through that audit. Now, actually, we've completed a significant amount of the audit already. And as we were saying earlier, having worked through the principles that underpin the 1819 financial statements and our value for money conclusion, the key risks that are reflected in here are very similar and will flow from agreeing those principles. So once we've finalised 1819, we should be able to move quite quickly through to conclude on these risk areas that are set out in the report. But those are set out in our overview from page 5 of the document, and you'll see that they cover the areas that we're required as auditors to look at. So misstatements due to fraud or error, and misstatements due to risk of income and revenue and expenditure recognition, which are required across any audit. And then we go on to issues of risk around the valuation of the airport, disclosures on going concern, valuation of land and buildings, including your investment properties, loans to your subsidiary entities, pension liability valuation, deferred tax liability, council dwellings and PFI. And those are all to do with the single entity and group accounts and the work that we will do or will have done and concluded on for the 1920 financial statements. Neil, I don't know if you want to add any more.
I think the only items I'll add is that the 1920 accounts will need to take account of the impact of the COVID-19 pandemic. So there will be, to the point that Councillor Chapman, I think, referred to about the impact of COVID-19 on the valuation of assets, both in terms of the airport, but investment properties as well. That we typically found in the 1920 financial year that valuers were expressing a material uncertainty as a result of the COVID-19 pandemic on the valuation of investment properties. So we would need to reflect on that. And that also applies to things like the recoverability of debts and recoverability of the debenture loans to LAL, which is quite relevant as well. So I think it's just that's only other point on the accounts. On the value for money conclusion, we've covered extensively where we've ended up on 1819 on the procurement arrangements. That also flows into 1920 because the council have taken corrective action on the procurement arrangements into 2021 and 21-22, but this issue first emerged in March 2020. So the arrangements that were in place that led to the weaknesses on the spot placement contracts also existed in the 1920 financial year. So therefore we will be qualifying our value for money conclusion in 1920 as well. And also we're aware in 1920 you had a report from Ofsted around the inadequate rating on the children's services and the improvement notice that followed subsequently. So we'll need to take account of that in our value for money conclusion in 1920. That's all I want to add.
Thank you, Janet and Neil. Abbas.
Thank you, Chair. To either Janet or Neil, yeah. So coming off page 5, 6, 7, 8, 9, and a bit of 10, that will change when you have completed the specialist reports and everything from FRG. When you've done that finalized work, obviously these pages will change. Is that my correct understanding? Because obviously what you got here is without that information.
I mean, my view is it wouldn't change because that sets out our strategy for the audit and how we're addressing the audit risks. The findings from our 1819 audit will flow into how we've responded to those risks in 1920. Yeah.
And the group account, other than what we previously go through audit and governance, like the Ofsted report, the assets, the pensions, is there anything else minus the airport, anything else on the group accounts that we should be aware of?
I think it's important to say that the Vauxhall Homes, we shouldn't forget about the fact that there are 2 subsidiary companies, and in 1819 Vauxhall Homes was not material at that stage, but it's a subsidiary company that is growing. It's not a subsidiary company that has the same level of complexity as LAL, but I shouldn't forget about the fact that the group audit also covers Vauxhall Homes, which is audited by PwC. and as that grows, the more we need to consider the scope of the work we need to do around those judgments in Vauxhall Homes accounts.
Thank you, boss. Any other questions before I move to next? Yeah, good.
That PwC do Vauxhall to stop like a conflict of it. You wouldn't be for you to, because part of my logic is says, why have we got that accountancy firm? Why don't you do it? But then another part of me says, well, hang on, that's probably to stop conflict of interest. So is there a reason why we've got PwC and you doing parts of the council as well? Thank you.
So they're a separate legal entity, and they have a responsibility to appoint their own auditors. So they will go to the market to seek their own auditors, and it so happens that PwC were appointed. It doesn't, in a group structure, actually often it simplifies it if we audit both the parent company, or the council in this case, and then its subsidiaries. But it does depend on, you know, different firms have different appetites for doing, or specialisms for working in different sectors. So they happen to be appointed. There's no conflict of interest there. Yes. Yeah.
But you could do it like
yes.
Yeah. Yeah, Jackie, please.
I just wanted to declare an interest that I'm a director of Vauxhall Homes, for the record. Yeah, as we went into that space. Yeah,
Okay.
Thanks.
Noted, Jackie. Anybody else? No. Which report? Recommendation is. Does committee recommend this recommendation? Yeah.
There is no recommendation.
It's
just to note.
Just to note.
Yes.
Thank. Yeah, we're doing item number 10 now, isn't it? So, Ernst & Young Value Money Agreement Report, Part 1 to 2. That's we done, isn't it? Yeah.
So
Janet.
us again. So this is quite a different type of report from what we've been bringing to you. And I think it's important for me just to set out the context for it before we then take you through what the key recommendations are in the report. So in 2020, the National Audit Office, who are responsible for setting the scope of the work that we do, they changed the code in terms of the work that we do looking at the value for money arrangements across local government and health bodies. And so instead of having the value for money conclusion that we've just been discussing for 1819 and the fact that it can be qualified or not, we now move to a program of work which requires us to look for the risk of significant weaknesses in your arrangements. And then it requires us to provide a commentary to you as to, you know, what arrangements you have in place and our evaluation of those against some specific reporting criteria. So those are almost the same as the ones that we've been using in the past, and their financial sustainability, governance, and how the council goes about improving its economy, efficiency and effectiveness. And the other thing that they changed was that we look at each year of account. So we look at what the arrangements were in place during the year under audit. However, we can comment at any point or raise issues with the council, with the audit committee, if we are concerned that there is a risk of significant weakness at any point during the audit. So we don't need to stop and wait until we finish the financial statements to bring you our views on this. And that's particularly important because we're in 21-22 financial year for you. We haven't signed 18-19 yet. However, we have concerns over some of the arrangements in place, and that there are a couple of significant weaknesses that we wanted to bring to your attention and make recommendations about what the council does about it. So that's the reason why this report is in front of you. It jumps us out of the time frame of looking back to 18-19 and brings us right up to date in terms of what's going on within the council. And on the page 4 of our report, we've set out for you how that risk of significant weakness is defined. And I think that's important because what we're not saying at this point is, oh, you've made a mistake, you've got a you've made an error in your decisions, you've got a major problem. What we're saying is we can see a risk to you that it could reasonably be expected to expose you to significant financial loss or risk. So we're looking at those arrangements and saying we'd like you, as those charged with governance, to be clearly aware of where we, as your external auditors who are independent from the organisation, have concerns, so that you can look at that through our eyes and decide what you want to do about holding the council to account to make improvements. So that's the context. It's a change in the approach that we're required to take, but it's us helping you as the independent audit committee think about where those risks are and what you might want to do about it. So on that basis, I'm going to hand over to Neil, who's going to take you through the key recommendations that we've included in the report.
Thank you, Janet. So the value from just to add to the reason for doing this now, obviously since the COVID-19 pandemic and the significant impact of the aviation industry on both LAL but also the council as the shareholder, there's been some very significant, difficult and challenging decisions that the council had to take at speed, and good examples are the emergency budget for 2021, the assumptions contained within the support to the stabilisation plan from LAL, the 21-22 budget setting exercise, and the sheer volume of advice that both I know LAL but also the council in its own right as shareholders had to get from a number of experts to consider the risks and uncertainties that are contained within the assumptions with LAL, and then the implications of the support that's been requested from the council by way of additional borrowing. So there have been some very critical decisions that have needed to take place throughout the 2021 financial year and right up to date, just at the point at which you're setting your 22-23 budget. And it's also for that reason, given the significance of those decisions to the council, and to Janet's point on the risks and exposures that we see, is another reason why we're bringing this report to you today, because we wanted to draw those attention to points that we would want to observe at this particular point in time. Just before I move on to the recommendations, contained within the report are a number of statements from ourselves where we commend the council for a significant level of good work associated with that obtaining, commissioning and obtaining external advice from independent experts to inform the decisions the council's been taking, task and finish groups, the role of within the council's constitution about how information's been provided to you to make decisions, and the level at which now the council's not drawing on as much as it originally thought it would need to do around the capitalisation direction and requests from central government. And I think we should commend the council for the sheer volume level of activity that's needed to happen to enable that risk exposure on the council's own finances to reduce significantly from where it was at the start of when the COVID-19 pandemic happened. And I think the council officers and through you as members as part of that decision-making process should be very much commended for that, and we do note that in the report. But nonetheless, we do believe there are three areas where we've identified significant action points for the council. And I think the first area is around how the council protects its financial sustainability in the medium to long term. And what we're identifying here now is that the council has committed to over £500 million of borrowing, which it lends on to LAL. And whilst we know in the reports that there are assumptions about what the future upfront payment would be from an incoming concessionaire, we still believe that is still a long-term prospect, and there are still material uncertainties in the airport's future asset value, what a willing market participant would be willing to pay for the airport at that particular point in time. And there's still the recovery from the COVID-19 pandemic that brings its own uncertainties around income streams that will come through LAL and into the council. And in reviewing all of the expert reports that have been provided to the council officers, we still see some risks and uncertainties contained within those arrangements, and we've highlighted those in the report. And as a result of that, we believe that there are some significant actions that we think the council could continue to take as part of its budget setting exercise of 22-23 and its medium term planning exercise. And the critical one really of all is that we believe now the point is at which that borrowing should be paused until such a point that the council's undertaken a further options appraisal on the ownership and interest in LAL, and that should be done at the point at which the DART scheme becomes operational. So we believe that there is a point now where we think that borrowing should be paused. That we also think that there shouldn't be any additional borrowing commitment until such a time that there is further work that's undertaken on the financial, legal and commercial due diligence on future schemes that are underway. Now, we know that the council has undertaken due diligence, and a good example is DART. I was part of the decision. I was part of hearing the decision-making process around the CPAR scheme. So I do know on individual schemes that the council does seek advice, appropriate advice, and goes through a process on due diligence. We believe that's more critical than ever now, given the level of borrowing the council has, that any future schemes associated with airport expansion schemes and any further request for financial support from the council is backed up by a clear feasibility and viability and how those schemes will be financed. And we also think that there should be appropriate modelling of those risks and uncertainties that are contained with all of the expert reports that the council has had. And what we mean by that modelling is undertaking stress testing, so real downside stress testing scenarios to reflect those material uncertainties that we see, and whether or not, as a result of those downside scenarios, can the council still be able to not just service its debts, but just continue to maintain the continuity of the services it provides to the residents of Luton and taxpayers. We're not saying the council isn't able to do that at the moment. In fact, we can see through the emergency budget and the 21-22 budget that the council's been able to set a balanced budget, hasn't had a significant recourse on its level of reserves, but this level of risk that's still contained within that level of borrowing, we believe it's important that the council continues to do that level of stress testing and modelling now and in the future. So that's on financial sustainability. We then have two other points to raise on how the council ensures it makes informed decisions and properly manages its risks. But I think as part of saying that, we're not saying at any stage that the council has made a bad decision. What we've identified is where we believe there are gaps in the council's governance arrangements that we believe need to be strengthened. And actually, we can see that the council themselves have commissioned their own independent review into the council's governance arrangements over its subsidiary companies, particularly LAL. A good example is the Bevan Britton report that was commissioned by the council, and also other independent and third-party reviews that have recommended that the council introduce a shareholder advisory group. And we believe that's a significant recommendation, and we believe the shareholder advisory group will significantly strengthen the council's governance arrangements. Why do we think that's the case? Is that we believe members can have direct access to experts that sit within the council's own governance arrangements that have expertise in the aviation industry, other industry and commercial practice, that can make sure that all of the advice that the council officers have got, have been fully interpreted, that all the risks and uncertainties have been fully understood and analysed to help inform the final decisions that are taken on any future borrowing commitments and future commercial schemes in whatever form come forward in the future. And that is just to make sure that there's an appropriate stand-back assessment on those schemes, to make sure that the options, the alternatives and the risks and uncertainties are fully understood before decisions are taken. Now, we can see that has become more important just given the impact the COVID-19 pandemic has had and the complexity of a number of ongoing schemes to expand the airport and the implications that could have on the council as shareholder. And we believe that has been a gap in the arrangements. We can see the council are intending to implement the shareholder advisory group and are taking a recommendation, I think either now or in the process of agreeing to implement that. So we are pleased to see that the council will be implementing a shareholder advisory group, but for the period in which we've looked at those arrangements, we believe that's been a gap, and we recommend that is implemented and addressed. And then the second recommendation under governance is to bolster the capacity and capability in the finance team to support Dev in his role as the Section 151 1 officer. Dev has undertaken a significant level of work over the past couple of years. He's engaged very actively and proactively with us from an external audit point of view, but Dev's had a lot on his plate in terms of having to capture all of those independent reports, that due diligence, keep the protection on the council's budget. And it's a difficult exercise when you've also then got to protect your own internal control environment for maintaining good arrangements for internal controls, financial reporting and financial management. And we believe that that Dev will be further protected by having a stronger finance team behind him. And we think that some urgency needs to be put now to bolster that finance capacity. We can see the council executive recognise that. There has been an appointment of a deputy section 151 officer, but we think more needs to be done. We understand from the council executives that there's going to be a significant programme of recruitment into the finance team, and we fully support that, but we think that needs to happen at pace because we can see a weakness there that needs to be addressed. And that's why we're making that recommendation as well. If I take the shareholder advisory group and the capacity and capability points in the finance team together, when we bring that together, we want to make this feel like as much of a sometimes with external audit, it comes across very negative in the way we express things, but we have been working alongside the council. The council recognise a number of these points, and that's good to see. We make these points because we think these are important to protect the council and to protect both the officers and you as members when you're still having to make some very critical decisions now and in the future on your finances and your interest in your in those commercial subsidiaries that you've got. And that's why we're making these recommendations today. And I'll obviously open it up for questions unless, Janet, you think I've missed anything there.
Thank you, Neil. Councillor Abbas.
Thank you, Chair. I've got a few questions, but firstly, thanks for the kind words, Neil, at the beginning there. I mean, we do try our best, all of us, to cooperate with you, listen to you, take your advice on board and implement whatever we can to help the council and yourself. Regarding your last bit on Dev, I'm surprised he's still got hair on his head. But the executive has noted, and we are doing work to help Dev out to build his network up. But then coming to my questions now a bit, yeah? So borrowing paused, yeah? Do you mean borrowing paused as in airport or borrowing paused as Luton Council? The group accounts or the airport? So no more investment in the airport or no more borrowing for the airport, I mean, or no more borrowing for the group accounts or future investments in the group accounts. So what do you mean by that?
Councillor Abbas, it's a really interesting point because as part of drafting this report, and that has gone through a number of iterations internally and with the council, I think we've wanted just to boil this down specifically to where we think the significant recommendation is. And we think it is just that pause at the moment on the level of borrowing and lending on to LAL. The council clearly will have a has to meet its prudential requirements on the level of borrowing it has as a council beyond just LAL in terms of its capital programme, Foxhall Homes, and clearly we'd be looking at that as an external audit point of view to look at it holistically. We don't have any significant concerns on that, though we are concluding our work on going concern at the moment, which actually touches on a number of those things. But our concern right now is associated with just taking that pause on the ongoing lending to LAL.
Yeah, thank you for that. And that's, I mean, because you didn't clarify it in your thing, you just said pause borrowing. So that's why I asked. I understand that bit. So that's good. Regarding this shareholders advisory group, your other implements like the modelling, the stress testing, we do that already, Dev. I mean, to a good quality, because obviously we've had projects.
Excuse me, Councillor Abbas.
Sorry, Councillor Abbas. In regards to the Luton shareholder group, the executives agreed to establish that at its meeting last week.
Okay.
So just for clarification on that.
Yeah.
Carry on.
I mean, I was carrying on there. I mean, but yeah. So we do all that to a good standard already, because obviously you are accountants, and you must see the steps that we take are pretty good, because I think they're good. But I mean, so what else do you want, like modelling and stress testing? Can you just explain that a bit more? What additional stuff do you want there?
don't wish, Janet, wish to add to this as well. I don't wish our report, because in the report we've listed in page, let's go to the page number. It's page 10 through 11. We've observed what we think are risks and uncertainties, but I think we have to be at pains to say that we don't want that to be an exhaustive list. There could be other risks and uncertainties that we've not identified ourselves as yet. I think it's important that all of the information that the council's captured from its expert advice, including this report and others, is just drawn together, and then downside stress testing scenarios is applied to each of those. And we'd expect to see that not just as part of the budget, but going forward as part of the council's medium-term planning exercise as well.
Okay, and the last and final bit. So where you're coming to audit governance with this new route of highlighting issues and bringing them to the risk. So we're bringing it to audit and governance to highlight the committee. Obviously, your say so, I mean, negative or positive. Do you pin us to a corner sort of thing, saying, no, this is the highest risk it is? Or do you give us an opportunity to go to outsource to a consultant to look at your opinion, what you have recommended to this?
So as external auditors, we have the responsibility to bring these points to your attention and to have you respond to them. We, as Neil has said, we've discussed at length with officers, looked at a lot of evidence to support the work that's been done to date, and this is the outcome of our work. So we are saying these are areas that we believe you need to consider and address. And as Neil said, you are moving through these already, and I think Dev's response is very positive in its the actions that are being taken and that are underway. If in terms of going to get a second opinion, you're free to go and ask for consultancy advice, whatever. But this is our view as your external auditors, and therefore, we've put that out in front of you, and we'll report that to you. It's not something that you can challenge in that respect.
Thank you.
Is that okay, boss? Thank you. David, Councillor David Finch.
Yeah, thank you. Just 2 quick points. First of all, on the shareholder advisory group, the Liberal Democrat opposition have decided to participate because it has the potential to be a really quite valuable resource. Whether it's managed in a way to make sure that that's realised, it remains to be seen. But in the meantime, we will be participating. I'm sorry to come back again to the valuation of the asset, because this is of critical importance, and it's also important to understand what is being valued. If the company decided to sell the airport, you would get a very, very different valuation than you would get if the council decided to sell the company. There are material differences between what you're offering to the market, and I just think it's important that we understand, and everyone understands, what exactly is being valued. If the company sold the airport, it would get a huge amount more money than the council would get if it was selling the company.
I think, Dev, you want to respond?
Okay, so first, you're absolutely right. The value will be the price a buyer is willing to pay. What is being valued here is the assets of the airport, how it sits in LAL balance sheet. And I will draw an analogy with the value of the company. So first, for the purpose of the accounts, directors of LAL, they need to reflect what is the fair value of the assets in the balance sheet. And the fair value of the asset in the balance sheet is mainly as a result of the future earning capacity of that asset, which is the airport. Yeah. So that's absolutely right what you said. So And that is at a particular point in time, which is at balance sheet date. So we have to do that every year. LAL will have to do that, and LAL has been doing that. So that value is reflected in the balance sheet, plus the value of the debt is reflected in the balance sheet, plus all the assets which LAL has. So when you look at the total assets, less the LAL liabilities, they will have liabilities as creditors and loan, then you get to what is the net assets of that company based on the balance sheet. And it is important because that's where, Councillor Frank, you raised in the past sometimes, what something called gearing. What is the level of debt against the level of net assets based on the fair value as at balance sheet date? And that's a critical ratio. This will show what is the value of the asset. It's a bit like when you're taking a mortgage. There was a head value of your house is how much you can borrow. So that is a critical thing. And when the value of the asset is going up, based at this particular point in time, it shows what is your exposure and gearing. And that's why when the value of the asset has gone threefold, the gearing against that value of asset. Now, you're absolutely right. Coming to the value of the airport, if the council decides or not decide, and that's a bit which Ernest and Young have mentioned, is about our ownership. And we do that. We did that last year when we agreed the stabilization plan. So there was an option to say whether we keep the airport 100% or we sell in stake. And that decision was used in order for the council to provide that stabilization plan. If at some point the council will review that again, when we make critical decisions in terms of lending, then we look at the ownership and the value of that ownership. So you're at two different things. But what is a bit closely related, that if somebody comes to buy LAL and LAL owns the airport, they will look at what is the earning capacity of that airport, which is a bit similar to what Deloitte has done. Look at the cash flow of the earning capacity, and that's what it says in 2032 will go up because all the income comes to the airport. So there's some similarity, but you're absolutely right. Valuing the assets and valuing the airport as an entity which we are going to sell our shares is two different things, but there's a close similarities. Both will be based on the earning capacity, but it's very complex and technical, but there's similarity. But right, it's valuing the asset is the balance sheet, but there's a correlation between the value of the company and the value of the assets because it's based here. Yeah. Thank you. Thanks.
Thank you. Is that okay, David? Any more questions? Are you okay? Yeah. Jackie, please.
Yeah. Thank you for your update. I just wanted to check the report today that's being presented. You've made it clear it is different to what we were talking about in the joint meeting. Therefore, is this an advisory report on suggestions for improvements, or is there going to be a qualification, either qualified or unqualified? That's number one. Yeah, if you can come up on that.
Can I come back on that? So we are required to report to you where we see significant weaknesses, which is what this is. When we come to provide the value for money, when we close off the audit of the 2021 and 21-22 financial statements and provide our auditor's report, we will refer to the fact that we found significant weaknesses in the arrangements in those years in our auditor's report. So our opinion, at the moment, it talks about the financial statements, and then it also talks about the value for money arrangements, and we'll include these as exceptions within our auditor's report about the arrangements that were in place.
For the 18-19, you haven't given a decision, and for the 18-19 value for money, you've told us that it's qualified. And what you're saying now, Janet, is that once you've closed off the when we move forward, when we roll forward and we do the 2021, you will then, whatever the conclusion is of the consolidated accounts at the time, plus council accounts, group accounts, then, and the value for money report. And that will, so right now, this is advisory. This is not final decision, this report. Have I got that right in my mindset?
So right now,
Yeah.
these will appear as exceptions in your auditor report. So whereas before we would, for the 1819, we have a qualified conclusion on your value for money arrangements. In 2021 and 21-22, these will appear as exceptions in your value for money arrangements in your auditor's report. Yeah, so yes, we are saying that these will appear. Yes, and
these will appear.
Yeah.
Right. So thank you for the clarity. So my question is, I had a question with regards to, in your report, you talked about stress testing, and Neil said that, and I think what the level of stress testing we have gone through in the past when we were deciding to do the loan, the debenture loan. So some councillors were not on the council. I believe we went to another level. So it wasn't that officers did the stress testing and they came to us and we said, okay, suppose the worst case, and if I remember, I've challenged Dev about ash cloud and what happened. So we got a taste as a council what could happen sometime in the future when we had the thing in Scandinavia. So the council challenged officers to go back and not just accept that as a past experience, but to compound it, to test it first. I think I said to you, Dev, twice that, if I remember, but my brain's not too good right now. So we did robust worst case that we could think of at the time. And somehow I heard that Neil said that we've done that, but I don't feel it was evidence enough, the level, because that would have been minuted or, and all that. And I think it would be good to evidence that in the report, yeah, because I know it has been challenging time, not for Luton, not just for Luton Council, but all of the sector. But I know, based on going back and doing more rigorous stress testing, that's why we move forward, and also ensuring that members did training on what debentures were, which some people didn't, but we did that, and I think I would appreciate that evidence in the report. So that's a comment, and I think I just wanted to ask. We talk about risk, but we never talk about reward, because there's the flip. There is the flip of risk, there is reward. And what we have taken is calculated risk, because we didn't want too much reward, because we know with too much reward is too much risk. And in moving forward, I think that would be, I think it would be useful to contextualize risk and reward, because we're going into a new world. We're in it, we're moving through it now. So I would really appreciate that, the risk and reward. And then the last thing was, there was a bit to recommend and confirm that beyond the November decision. I wanted to get your T's on, we are the lender of last resort right now. Yeah, so disasters happen. You're saying we're not to lend, but where does that leave us? It's like when the pandemic happened, government had to do things they never thought that they had to do, because there was a worse risk by doing nothing. I think you alluded into that, or did you? And that's what I want to tease from you, if you could, because we are the lender of last resort for the airport, and we're not through the pandemic. So could you, I just want to get where you are on that, on not lending any further, what my colleague was saying. Thanks.
So the key point around those 3 bullet points on page 5 is you do a lot of this work. You do a lot of financial planning. You take some really complex decisions. the position moves very quickly and you have a whole range of risk and uncertainty and then underpinning assumptions that build up the position that, the recommendations that you then consider as members and take forward. And our view is that it's really important that every time you're taking those different decisions, that you have time to pause and reflect and have a fully updated position of what those risks are, what the underlying assumptions are, what the downside scenarios could be, because it's so complex and because it moves at such a pace, there's a risk that something that perhaps you all understood and took as the right basis for a decision 18 months ago will have moved significantly. And it's how do you as members know that you have covered all of those assumptions and risks each time you arrive at making a new and critical decision. So our point is that you must make sure you take into account all of that information. You continue to update it. You continue to have a full understanding of all of those different moving parts and the risk to the council before you then step into the next decision. The airport is seen as a great thing for the council. And so there's a risk that that's your starting point. And our point here is make sure that you consider all of that position each time you make a critical decision. Our concern is that it would be easy to miss one or two of those critical assumptions or not to challenge across all of the range of the complexities each time you need to do that. And therefore you could expose the council to risk inadvertently. So that's the point of making this recommendation to you.
So if I could summarise, what you're saying, Janet, is that we need to be agile in the speed of stuff that are happening. So we review the decisions frequently and fast. So therefore, in our process, we need to have some sort of exception reaction to when things happen. And if I've got that right, and the need to pause need to be maybe programmed in sometimes, because these are big decisions. And also make allowances to have a pot ready to bring in resources. Would that be about fair? How I'm.
So I think you're taking our recommendation and you're moving to the next stage of interpretation.
Okay.
And which I don't want to step into that space. These are our
No, that I'm
recommendations.
trying to understand, because your recommendations, we need to go away and action, so then we can demonstrate to you that we listened and we reflected.
Absolutely.
And we incorporated. So I want to make sure that the understanding, we're both on the same wavelength.
Yeah. So I think what all of your points are that next interpretation of what actions you could take.
Okay.
So as you say, you need to go away and have a think about all of those different actions that you could take in response to this. But I think those are 3 different options that you have as to how you might take this further.
Okay, thank you. Okay. Thank you, Chair.
Thank you, Jackie. Yes, Councillor Chairman.
Thank you. So following on from that and following Councillor Abbas, so just taking it further, I know we shouldn't have this meeting, it could be a thing that they said don't borrow to allow. So you might say, well, we'll borrow to allow to keep them going on a daily basis, but you wouldn't borrow to allow for expansion. Could be an option. I've just lost my screen, it's gone blank, sorry. Just on these shareholder advisory group. So that possibly answer Councillor Abbas' question, would be something that we could send as audit and governance our concerns to, because they've got people and they can kind of flow back to us. So I see it perhaps as complementing us, because I think there's a feeling that we do that already, but it could be, correct me if I'm wrong, a kind of group that assists us as much as, so it is a new group, isn't it, shareholder advisory group, but it's we could kind of recommend to them to look at, to assist us, I presume, if they've got these people around us.
And it comes in at a key point in your decision-making process to be able to give you as members that protection of having individuals you can have direct access to with that expertise, say in the aviation industry, commercial industry, to make sure all risks and uncertainties have been identified, have been fully captured, and you can assess all the alternatives and the options before you make any further decisions.
Thank you. Just following on that, again, on recommendation, how often should that group meet? It was just a thought, I wrote more meetings, or is that?
Matt.
It was a big document, but I think Councillor Franks has a copy, could forward it on.
You're not reading it, so don't worry. It's been.
Yeah,
I don't
it's
know.
in the process of being established. It was set up last week at executive. where
Executive,
they're
yeah.
deciding who's going to be on it and who'd be chairing it. So it's only at that stage at the moment.
Okay, and once
But
that
it's gonna
stage is clear,
happen
can you
quite
make it
quickly.
like to all members then? The structure of how it works and everything?
Yeah, it'll be publicly available.
Yeah. That's okay.
Sorry. Again, just going back to making a stronger financial team, totally happy with that. But we're going to come back with this age-old adage even that we can't get people to come into our council. Have we got the skills outside of it? Well, exactly. No, that's sorry. Yes, indeed. Sorry, So we're being asked to do that, and as Councillor Burnett says, all councils and even public sector can't get these people. So how might that? So you're asking us to do that in the real world. Will we be able to do that? Dev has, because again, would it be lots of? Yeah, that would be our other point.
Thank you, Councillor. Dev, you want to say something?
Just unless other members have got any questions, then I was going to respond, and then because there are certain points in my report, so I would give members a chance if there's any further questions. So
Yeah, thank you. Carry on.
okay. So coming back to work closely with our auditors, we always work as a team, and auditors are making recommendation. But one of the things which I would point out when we talk about risk, we're talking about potential risk. Yeah. So we're not talking the risk imminent now, and that's what we do. There's inherent risk. When you run a commercial activity, there's inherent risk. So any activity, especially when you're talking about the pandemic, everybody knows, all the companies, British Airways or Heathrow, there's inherent risk. So we have to acknowledge that. Now, although we agree with, I will take you for the recommendation once it's done. So it's covered in my report, so I will cover it. But having this open discussion has covered quite a lot of things. Yeah.
Dev, can you cover item agenda 11 as well? Because that's related
okay.
as well. Yeah.
So I'll cover item 11, some of the response. So first, if you look at, before I come back to the recommendations and we'll go one by one, and our auditors are here, so they will agree if there's anything, yeah. And as Janet mentioned, these are statutory recommendations, so we have to respond, and that's what we are responding. So at this closure of this meeting, we'll have a set of recommendations. But just if I take you on page 11, is it page 11 of my report? 11. Yeah, 11.1. But I take you to page 11.3 before coming back to the recommendation. Yeah, 11.3 is the response to auditors' recommendations. Yeah, is a table, neat landscape. Yeah. So first, coming back, absolutely, there's questions asked. There's question asked by members. There are nuances in some of the recommendation. It's only the council can decide eventually what is the level of borrowing, and it's part of the budget setting process. And there's a legislation plus prudential code with the council you have to borrow. And that's we've done that every time when you for DOT, for SEPA, for the stabilization plan, we take through the process, and there are treasury management ratios which you have to comply, and it goes to full council for approval. I think the recommendation here, we carry on doing that, and if there's any additional borrowing, then we have to carry out what's called the options appraisal of ownership, which we did last year when we took that decision to stabilize. And then it says a market valuation, which we did last year before we agreed on the stabilization plan. So what you are saying here is we've demonstrated we've done it last year before we agreed the stabilization plan, but our auditors are saying, but just bear this in mind because the aviation industry is quite complex, but carry on doing that when you take the next decision. And the next decision might be part of the expansion or part of any further stabilization because we don't know with COVID. So, and that you will see in my bullet point. The last bullet point, I say the council also has a legal obligation under the concession agreement. So we've signed an agreement, and with COVID, we don't know what is going to happen. And it's very much based on the passenger adjustment mechanism on what will happen to passenger numbers. So we've got contractual obligation as a council. And what we did when we put that stabilization plan is to make sure the airport is a going concern. So there is an obligation for the council and for LAL to be a going concern. So those we will carry on looking at and evaluating, and what is going to be the level of borrowing, or if there is more borrowing or less borrowing, that will form part of the budget process, and that will form part of the approval, which goes for the normal, through FRG and executive. But one of the things which I would say is, just picking up from the stress tests, we can always do more stress tests. Yeah. But just to say in the past, what stress tests we've done. The first stress test we carried out when the council agreed an emergency plan of 60 million to the airport. And at that time, we just got into the pandemic, and based on our stress test as well, we approached DCLG for a 49 million of support. Because at that time, our stress test was saying, okay, we are in a pandemic, it's very difficult to know what is going to be the impact. And we know now that out of that 49, the council has drawn up to 15 million. So the stress test was a bit like, at that point, a worst case, but we managed to draw down just 15 million. This means that our emergency budget, which was under the decisive action by the council based on the stress test we carried out. And that emergency budget, looking at the stress test and looking at the financial position of LAL, we've agreed not to rely on any dividend going forward. So we took very decisive action to say we know, we don't know. So those are the first stress tests we did. Then the second bit, when we agreed the 2021 budget, that was the next level of stress test. And in February 2021 as well, there was executive approved what we call a stabilization framework. And that stabilization framework was to allow officers to work within the boundaries to agree what is going to be the future stabilization and support to LAL. Because we're still in pandemic coming out on vaccine. It was 2 years has been very much up and down, up and down. And after that, we did a further stress test, and that's where FRG was involved as part of scrutinizing what is that final stabilization plan. And that was approved, I think, around November. After that, when we went into 21-22 budget, we did another stress test, and part of that stress test, the council has got a reserve amount of 20 million, which LAL has not drawn down yet, which is in the form of preference shares. So that contingency based on that stress test is still there for LAL to draw down. Based on that as well, we set up 2 million in the budget 21-22 to service any debt. So that, as part of that 2 million, you will see in the 22-23 budget, there's still 1 million left. So if LAL come with other requests, which they have up to an amount which is agreed, there is already the budget there to support that. Absolutely, I agree with our auditors. We don't know. Who knows with the pandemic? Who knows with Omicron? Yeah. But we've done. If we prepare a budget based on the worst of the worst case scenario, we will put borrowing in our balance sheet, which will be looking very the worst case. So we do a best case, worst case, and we took the central case. And so far, based off 22-23, you will see in the budget, the 20 million which have set aside, that cover the central case, i.e., not the best case or worst case, but central case for LAL, there's 22 million as what we call a reserve, as firing power. So we can deal with those. Of course, if there are extreme circumstances, then we come back and we revisit and we take normal due process. In terms of governance, which I would say here is, and I say we very welcome Ernst & Young, but we have to put in context. I'll take you the journey of how we arrive at a decision in the council. And that's absolutely based on the constitution of the council. So LAL will go through their board and will agree, and LAL will get all the expert advice. And based on those expert advice, LAL will present their case to the council as a shareholder. Then the council has got its own, as laid down by the Constitution, and the council has drawn down on expert advice, both legal, financial, commercial. And then the council will start with the process of going through the joint board, going through the officers. Officers will get all the, my role as statutory officer, I will look at the finance. We get Jacob's work on it. And then it goes through the normal process where we set up a specific bespoke FRG or task and finish group. And the role of the task and finish group, as per the Constitution, is to look at a specific decisions. Time and time again, we've done that. And that's, I think, is an alternative to having a shareholders group. But now we know there's a more need and urgency to have a shareholders group. The task and finish group has served us well so far. There are projects where Councillor Frank has chaired, and there are certain projects which clearly made clear recommendation and executive took recommendation on board. So the system has worked. We are trying to take it to the next level, and that's next level is having that shareholders group, because things are getting complex and the environment is getting more complex. So the governance which we have done everything according to what is a council constitution. We took all the expert advice. Lal took all the expert advice. We follow the process. We can always do more. And that's why EY is saying is you're getting in this level. And what EY recommendation is, because you're talking about expansion, so we might be further financeability, try to do another valuation. We'll do that. And we've done that time and time again. In terms of the risk, yes, absolutely, I agree. We always have to keep an eye on risks and uncertainties. And when you look at the stabilization plan which we put together, there was a lot of risk highlighted there. There was the risk and uncertainties. But the other thing is, not doing anything is a risk in itself. Not exploiting any opportunities is a risk, because they say you're too much risk adverse, so you're not exploiting opportunities, so you're not generating income. So that's absolutely, but I fully agree. When you've got an airport, which is a significant asset for the council, but it's got with inherent risk. Any business has got inherent risk. Even delivery of the council service has got risk. So we have to bear this in mind. What I agree, as I said, is we have to keep an eye. That's what you are saying, just every month or every 2 months. And right now, after Omicron, we were doing another stress test. Now, Omicron, or whatever, it's getting a little slightly better. So our stress test is showing, hang on, we are moving more to the central, or it might be more moving closer to the best case. If we have another, it might be closing. So decision will have to not based on a monthly basis, but it's much more what are the data and what is saying. So we'll carry on, absolutely, we'll do that. In terms of the valuation, as I said, we've already discussed that, but at when the pandemic hits, the emergency budget, 21-22 budget, the stabilization plan, the special force measure approval, the passenger adjustment approval, the 22-23 budget, all along significant report, all along follow exactly the Constitution. And we, myself and Robina as well, had meeting with Councillor Frank as well to discuss where we are. And FRG, Task and Finish Group has worked. You've been sitting in some of these meetings. And we provide detailed bespoke training to our members as well. So that was training provided by SIPFA, some of the provided by, I'm sure you know, Dave Kempson, Section 151 officer. He's expert. And because I didn't want to, as a section officer, so those training, very bespoke training, and it has worked. Like on CPA, it's worked. On DOT, it's worked. So every key milestone where we're making decision, we go through process. And we discuss with our auditors as well. And our auditors, we invite our auditors to join those meetings and to speak to those meetings as well. So absolutely do. But there's always more we can do. Yeah. So just to have a wrap up on those things, I just wanted to And the Task and Finish Group was looking at the interests of the shareholder, but I think we have to enhance that arrangement and take it. But we'll do more stress tests in an environment of that. We do that stress test. But you will see in 22-23, there is £1 million still there for any interest. Yeah. So what I would suggest now, I know it's getting late. Our colleagues are here, Ernst & Young, so we'll take through the recommendation to just take you through what is in front of audit committee members. And then we've had an update from EY as well. So we go through one by one, and then I will take you through those recommendations, if that's okay, Chair. Yeah? Yeah? Yeah. Okay. unless members have got any other questions or comment clarification, we can go for the recommendation.
Yeah.
Yeah.
Any questions?
Dev.
Abbas.
Dev, so you're looking at, so when you say recommendation, so that's item 11. Yeah. So you're going to go through all 20 recommendations.
Below
No, 20, not 20, 30.
Yeah, it's about 10, I think. It's
No, it's 31.
1 to 11. Roman letters 1 to 11.
11.1 and 11.2, yeah?
Yeah, exactly. Yeah.
Oh, okay, so you're not going to go through all 36 of them?
No.
Yeah, that's all right. Let you carry on.
It's 8 to 10 past 8, Councillor Abbas, so just bear with us. And I think our colleagues as well has got a long journey home, so my apologies. Yeah, but that has been a very good meeting. Century Park Access Road, we take it one by one, Chair, yeah? And then you just call the vote. Yeah, page 11. So Century Park Access Road, impairment, we've all discussed, we agreed to impair the project costs. So if we want to take a vote on one by one, to impair the costs. That we discuss.
Yes, thank you. Agreed.
Great. Yeah. TCO, as Neil and Janet mentioned, we are close. We are still discussing. We've discussed today. We'll be discussing. So at this stage, to note, and further discussion is taking place. So the next time we'll bring it to audit committee, and that will be with the accounts. We're ready to sign the accounts. Yeah. If there is still some disagreement, then we'll, yeah. But we are getting close. Yeah. Good. Yeah. This is note. It says yes.
Noted. Yeah.
Yeah. You will see in the recommendation it says different note that the LBC has provided. Yeah.
You have a question? Yeah.
Because every meeting we've gone.
Yeah.
Next one. Is there we've said before there's not a deadline, so.
Our plan is in the next 2 weeks. We just discussed. We all getting tired. Is getting yeah closure. Yeah.
Is the answer going to be 2 weeks, 6 weeks, 8 weeks, 12 weeks? Yeah. We're hopefully.
Councillor Abbas said I haven't got here. It's a week, Councillor Abbas.
Yeah. Councillor, trust me, they're speaking every day. I know that. So many times, not only once.
Third, clearly auditors mentioned if you're going to take significant decision at each
Sorry, Dave, the last one is agreed to note it. Noted. Yeah. Noted.
Third one, airport valuation. Clearly, our auditors are saying if you're going to get involved in further investment, that you have to get the airport valued, and that's what we are going to do that. Because if there's significant reduction in the value of the airport, then of course we'll have to take this into account because we have to know the level of borrowing. So that's we are saying we await external auditors analysis, and this one is which figure is going to be reflected in the accounts. So that's one we've got comments from here. We are close on that. That will be reflected in the accounts. But here the recommendation is delegate authority to the service director to make the necessary changes to the accounts. Yeah. So we've discussed that as well. So we await external auditors analysis. And if we got to the value, then delegate authority to me to reflect this in the group accounts. Yeah. And to delegate. Fourth, going concern disclosure, as our auditors mentioned, we are close to that as well. Looking at the cash flow, looking at the disclosure and what we've discussed. And then once we've got feedback from our external auditors, we disclose this in our accounts. Yeah. So
that's noted, yeah?
Yeah.
Yeah.
So if our colleagues, yeah, so forth.
Janet, is that okay?
Yeah. Fifth, value for money conclusion. Yes, I think we note council has made changes, but at the same time we note that the council will the accounts will be qualified on value for money of procurement. Yeah. Okay. Yeah. The sixth one is just the committee to note that EY has pointed out that at this stage there is no other issues concerning economic efficiency and effectiveness. So at least we know as committee members the value for money is on procurement, but the other areas of value for money that hasn't been any concern. Yeah.
Agreed.
Okay.
Can you make sure that's minuted? Because the recommendation is says we have no matters to report. And as you clarified, no other matters.
No other matters other than
Yeah.
procurement.
That would
Absolutely.
be good. Thank
Yeah.
you.
Yeah, it's minuted.
Yeah.
Done.
Okay, good. Then we come to value for money arrangement. First, and that's where we talk about ownership. And EY recommendation is if we come to significant decision, some critical areas where we want to borrow, and if this is something like it's not contractual, like some of the concession agreement is contractual. So if we have a duty to support that, council will have to take that decision. It's we as officers, we can't. But the point EY is making absolutely at those critical points, make sure you look at the risk, you look at the valuation, you look at the ownership options, and that we have been doing it. So because of our exposure, EY is reiterating, make sure there's more emphasis on those things. And we agree on that because something we have been doing it, but we have to do more if necessary. Yeah.
Agreed. Yeah.
In terms of borrowings, I think EY made that comment and it's linked with the ownership and the additional exposure. I think our auditors are saying when you think about additional borrowing, make sure you assess all the risks, do that stress test. That's we agree as well. And this we normally do it as part of when we set the budget. So we do a stress test, we do our exposure, the debt servicing. So that as well, we agree to do that. At each critical point in time, we do that.
Agreed, mate.
The 9 was to do due diligence to support decision-making process. And that's, say, coming out with stress test. That as well we note, and we, as mentioned, we do carry out due diligence, but now we will have the shareholders group, which will part of the enhanced decision-making process. So we'll do that due diligence. And the next recommendation says, acknowledge that we set up that shareholders group. Yeah, so acknowledge, yeah. Then the finance one, finance capacity and capability, that's as well. Number 10, because that's a shareholder, it has already been done. The council has agreed in January.
Yes, that's been done in executive last week, I think.
Yeah. We just will have to make sure when we are embedding that, we'll discuss our auditors to make sure they are comfortable as well. Then finance capacity and capability here as well. There has been a money allocated in the budget, and I've got some staff. We'll go for a recruitment, get good permanent staff. It's not easy to recruit, but we will try our best because working for the council, it's good. You've got an airport, which is not every council has got an airport. So I'm doing an advert for anybody listening out there. Just come and work for the council finance department. It's very exciting. Yeah. So on that bombshell, if our auditors are comfortable, we've addressed their statutory recommendations. So, and everybody's, yeah.
Last one agreed as well.
Yeah.
So this is agreed, yeah?
Thank you.
Yeah. Before we moving to agenda item 12, local government, we need to move private